Welcome back. Well, welcome back to another week of trading, and a big week for the U.S. dollar ahead. Let's recap what happened last week, and I'm continuing to be very bullish on the U.S. dollar since the Federal Reserve started easing this monumental round of quantitative easing. And let's have a look at job numbers, right? What I dig about job numbers is how continuing jobless claims keep dipping and dipping every single week, right? So that's a red flag for more uh, for an increase of the Federal Reserve asset purchasing, right? So when jobs start to pick up in the economy, the intervention of central banks is no longer needed, right? So they start easing down that asset purchasing program and they start hiking rates. The other number that I want to look at is inflation numbers, right? That was on Friday, I reckon. CPI, we got CPI numbers or Wednesday. I don't remember. Hold on. Um, well, CPI numbers came higher than expected. That was actually expected. Now, here they are, right? CPI came out at 0.3% and was expected to come out at 0.2%. And core CPI, that was a big woozy, came out at 0.6%. It was expected to come out at 0.3%. So high inflation still in the United States. So besides high job numbers, right, the Federal Reserve has to act against inflation, which means that they need to start hiking rates. Which is absolutely very bullish for the currency. Now, if we go back to the US dollar, this is the US dollar currency index, which is a basket of the biggest US, the biggest economies or currencies the US trades with. Um, broke with April highs, right? So I was expecting, and if you notice, last week was very choppy for the US dollar, right? We were trading inside of a very tight range. That's why I didn't trade at the US dollar. Actually, it was a 1.7 range, right? Right before Friday's breakout. The only trade that I took, I'm sorry, on the USD was, I think it was a US dollar Mexican peso long, right? Which is basically a US dollar bullish position, when the DXY rejected these previous levels. So I'm pretty hyped about next week because of how the US dollar closed on Friday. What I'm expecting or what I'm hoping for, I know that, well, I hate to use that word when trading, but this is in fact what I'm expecting is a retest of the April highs. So on the DXY would look like this, a 103.90 to 103.93, right? So that can happen on Sunday, right? On Sunday open a retest, right, it could go even lower to this previous base right here. So this is basically my buy zone on the US dollar between the 103.36 and 103.94, let's call it, this entire zone right here. So I'm waiting for a dip towards this zone and clear rejection, right? And then I'm going to go and find US dollar long. What I like about this is that we already had that clean break of March 2020 highs and April 2020 highs also. So on the daily, looks like this. Targets should be around, well, we haven't been trading in this area for a while. Also, if you notice, this was also a big key level on historic price action right here, December 2016 highs. So let's go even higher to the weekly chart, 2 week chart. All right. So basically, this would be my next targets. Um, let's delete this line, and I'm going to be adding this one right here. This would be my next targets on the US dollar on the long side. These are September 2020, September 2002, 2002 highs around 20 but most importantly, December 2000 lows. So that's a big move to the upside. I'm just waiting for that pullback towards April, April 20, well, last month's highs, right? For a possible 4% move on the USD since we've had this clean break of that powerful zone. So heads up to that. Of course, I'm not going to be buying the US dollar currency index. I'll probably play this out against the Mexican peso or the Norwegian krone. All right? Have a safe trading week.